Ratings agency Standard & Poor's is not considering downgrading South Africa's big four banks and supports the manner in which the Reserve Bank has managed the collapse of African Bank. S&P said the rescue plan the Reserve Bank had devised was in line with global best practice and principles on how to resolve problems with banks in a crisis. In a surprise move this week, ratings agency Moodys downgraded South Africa's major banks, FirstRand, Standard Bank, Absa, now owned by UK's Barclays Bank, and Nedbank, and placed them on review for further cuts. Investec was placed on review for a ratings cut. Well, to talk about this, we joined on the line by Mohamed Nala, an analyst with Nedbank Capital. Good afternoon to you and welcome.
Thanks for having me.
Well, Mohamed, it looks like the daggers are all out for South African banks. What do you make of this saga ongoing regarding the downgrading of banks by Moody?
Well, first and foremost, I think if we looked at that Moody's downgrade that came through after trade, but certainly earlier this week, lots of criticism being levied on them by the South African Reserve Bank specifically, and this really hot on the heels of them downgrading Capitec Bank last week. Now, the reason why it's come under a lot of criticism is that one of the fundamental premises of their argument is that they believe that the systemic support for the South African banking system by the South African Reserve Bank has been eroded somewhat, and that, I guess, was one of the firm basis in terms of their decision to downgrade the big four banks as well. I think, if you mentioned in your intro the S&P announcement today that they don't intend to actually downgrade the South African banks, and they've actually made mention of a lot of the key points that I certainly would agree with, and that one of those key points is that the South African banking system in general, our financial institutions and our banks, remain one of the best regulated in the world. We're also one of the best capitalized banking systems in the world, and so as a result, I think, yes, obviously there is this bail-in where the big banks have been effectively co-opted by the Reserve Bank to help shore up what will become a good bank out of the better assets of African Bank. But that doesn't necessarily compromise the entire system in terms of the South African financial system right now. And I think that's being echoed in terms of S&P's announcement today. So for now, yesterday we had a lot of noise come through. We had the banking stocks sell off a little bit during the trading session yesterday, but they've subsequently bounced back and are now actually trading above the levels that they were trading at prior to the Moody's announcement.
Well, the demise of African Bank has been criticized based on the model it was created on. And of course, borrowers were said to be borrowing money so that they can be able to buy luxury goods. It was not based on a model whereby you lend so that people can create capital and be able to manufacture goods and export. What do you make out of that? And especially now that, will this be a lesson for those who practice unsecured lending?
The unsecured lending space specifically by its nature is, I guess, geared towards more consumption expenditure rather than the type of expenditure that incentivizes people to create capital. Obviously, if you're looking at secured lending for people that go and buy houses and take out mortgages on their properties, that's more orientated. So secured lending is orientated towards building capital in the economy and on consumers' balance sheets, whereas unsecured lending is generally for the people in order to help them make ends meet. That being said, I think one of the other fundamental flaws in terms of that African banking model was obviously the fact that they were primarily just a lender. They did not have a well-established transactional banking business, whereas your big four banks, and then also if we throw Capitec into that as well, they have a transactional lending environment as well. So I think a slightly more diversified revenue stream in terms of the existing banks that are currently operating. But let's even rewind to the actual consumer behavior here. South Africans have a notoriously poor savings rate. In fact, our savings rate across the economy is currently at zero, which means we don't save. We actually go out there, we borrow money, and we try and live beyond our means. And so I think a little bit of introspection in that respect in terms of how consumers conduct themselves as well, because lenders, certainly unscrupulous lenders, would be more than willing to advance those funds to consumers, and consumers need to understand whether they should be taking on that debt or not. The general rule of thumb in terms of any good, sound economic advice would always be live within your means and do not spend more than you earn.
Well, just very briefly, Mohamed, Moody's said that the Reserve Bank's failure to fully protect African banks' creditors raised concerns about the extent of future support for other banks and should they need it. So is the Reserve Bank going to manage the collapse of each and every bank in case this happens? And can we say that the rating agencies are now beginning to paint all the banks with the same brush?
So So I think they are starting to try, or I guess Moody specifically painting all of the banks with the same brush. I think the specific fact that Moody's was upset about is if you look at the African bank restructuring, what effectively happened is that subordinated debt and equity holders within African bank were effectively wiped out. There was no support afforded to those particular investors, but the support then obviously cascaded through towards the senior debt, and the people or the holders of senior debt only had to take a 10% haircut. And I think that particular structuring of effectively of African bank and how that plays out, that's what Moody's has actually taken exception to. So, I think, in line with S&P's commentary earlier as well, the way the South African Reserve Bank have conducted themselves in this particular manner is certainly in line with international best practice, and it's why I'm not particularly perturbed or concerned around any broader systemic risk within the South African banking system at this stage.
All right, Mohammed, thank you very much for your analytical perspective regarding this ongoing saga of downgrading the banks. And of course, ratings agency Standard & Poor's says that it's not considering downgrading South African banks and support the manner in which the South African Reserve Bank has managed the collapse of African Bank. And of course, that's totally an opposite view of Moody's. And of course, this contradiction will keep tabs on it regarding what happens in the banking industry. And of course, we've been speaking there to Mohammed Nala, who is an analyst with Nedbank Capital.